Sell everything. The bull market is over. Gotcha. I'm just kidding. But that is seriously the sentiment right now on X, social media, crypto, YouTube, and TikTok. But if you're watching TikTok for your crypto information, that's beyond me. But okay. Anyways, because I know the sentiment is so garbage, it's so god awful right now across social media, I want to show you a few things that's going on that I've seen over the past week or so since we had that massive liquidation, right? Bull run ends in 10 days. Cycle peak countdown says BTC is 99.3% down. 1,058 days in as we shake out weak hands in classic pre-peak pattern. Listen to the verbiage here. Pre-peak pattern, okay? Are we in a bear market or there's more upside? Let me explain. Now, I'm not going to go through his entire synopsis here. I did it myself. But as you can see here, he's targeting October 24th is exactly 10 days away from when he posts this, which is obviously October 14th. And that's when he thinks the cycle is over. This is the sentiment we're dealing with on crypto right now. I'm going to give you a lot more examples of other people that feel this way. And I'm going to give you my take on it after about how I feel about it, because some of the things we're saying is valid, but most of it you got to take with a grain of salt. And the reason why he's saying these things is because he's basing his synopsis completely and solely off of the 4-year cycle. Now, I also want to bring up a good point that this is a pretty big channel, right? Crypto Burb, I've never heard of him before. Building millionaires, as you said, the bird's nest. And he has over 720K followers. People that actually subscribe to this guy that are probably leading, is probably going to be leading most likely thousands and thousands and thousands of people down the wrong path. Now, a little bit smaller of a ex-crypto influencer, but look, he says, if the coin takes out the recent lows set by the largest liquidation event in crypto history, that's it. Game over. Bear market. It's a wrap. Go home, right? That's what he's saying here. So my opinion, like, you want me to believe that just because we had the largest liquidation event in history, which sounds crazy by me even saying that, people are not realizing that, listen, the market is also larger than it's ever been. So as the overall market cap of crypto continues to grow, do you not think that we're going to have cascade events like this that mirror Luna, that mirror FTX, that mirror Mt. Gox? Of course, because the entire crypto market is a lot larger than it was back then. So I just want to show you the amount of, like, my title of this video, thumbnail, and the intro wasn't necessarily clickbait. It kind of was. I'll admit that. I did get you. But that's the sentiment we're seeing right now across social media. And that's why I had to make that joke at the beginning. Anyways, I want to show you another account. This is also another smaller X poster, whatever you want to call it, right? Influencer. This is the worst crypto bull run ever. Too much rotation, frequent narrative change, and no sustained move. Now, you have to understand that no bull market or bear market in history just goes like this, right? That's what people expect. They expect it to just go like this. If you look back in any previous cycles, which we're going to get into later in the video, all of them have went like this, but the overall overarching trend has always been up and to the right. Intra stuff like this, we don't even worry about here on this channel. We keep our emotions right here at all times. We don't get too greedy. We don't get too fearful. We buy the dips. We sell the tops. That's how we do it on this channel. Let me continue going through this guy's post. We started in 2023 with no advantage over someone who started today. That's a lie, because if you know, I always show coins that have went up 2x, 3x, 10x on my channel that we picked up over a year and a half ago, okay? In fact, person from 2023 is more scared and exhausted than the new joiners. Shitty cycle, honestly. This is laughable, and I'm going to tell you exactly why it's laughable throughout the rest of this video, but I just want to share a bit of the sentiment of what's going on right now out in the streets. So there's a reason why people feel like this, and it's because people have a herd mentality. Now, if we look at the fear and greed index, right, for crypto, you can see that we're at a 28, right? We're at a 28. The fear last week was at a 30, yesterday was at a 34, and the fear last week was at a 70, on the fear and greed. So just 1 week later, we can see how quickly the sentiments change. And this is the thing I tell you guys not to do, right? Not to fluctuate with the market's emotions, because that's how people get trapped selling bags prematurely and they don't look at the overall arching scope. And I'm going to tell you where I think the market's going this cycle and where we could possibly peak. And I'm going to tell you the exact indicators to watch and look out for so that when that time comes, you know when to sell close to the top. We never time tops or bottoms, but you're definitely not going to sell prematurely like most of these people on X, on crypto YouTube are doing at the moment, right? And just to prove my point, right, I want to go over to bear market lows. Look at this. Bear market lows. At the end of 2022, right, when mass capitulation happened, we dropped around to like 15.7K, right, on Bitcoin's price USD. We're almost at that exact same mark now. We hit 24 on October 12th, and I believe that was the liquidation day, if I'm not mistaken, or 2 days after the liquidation day. And we also reached 25 at the absolute bottom of the market. So when I'm showing you stuff on the chart, people are thinking irrationally right now. To even think that a crypto cycle is ending with all the macro stuff that's happening in the background is psychotic, and I'm going to prove it to you this video. I'm going to show you metrics, I'm going to show you charts, and why you should not be freaking out if you're one of those people. And if you're one of those people that sold last week on that liquidation event, not financial advice, but you should probably buy back in. I'm going to prove it to you throughout this video. Now, mind you, the fact that we had the largest liquidation event in history, and we're talking about Binance, I want to show you right up here, Binance, BTC, USD. And Binance are the main culprits for a lot of the manipulation that's happening in the market, right? We've known that and we've seen that. Everyone's talking about it. So I'm going to show you how to avoid getting trapped if you are a trader, or if you're someone that uses leverage, or if you're someone that holds spot too, because you can just simply buy at a lot of these levels, right? I want to show you the liquidation heat map. And the reason why I'm showing you this heat map is because Binance is the largest exchange on the planet. They have the most volume and they have the most liquidity across the board, bar none. There's no exceptions. This is 100% a fact, okay? This is not me just talking. This is me spitting facts, okay? Only facts. Now, to understand this chart a little bit better, you want to look at the yellow lines, because that is where a lot of liquidations, as you can see here on the chart, the price liquidation levels are at, and you can see 108,000. So what these liquidation what these exchanges, I should say, like to do is wipe out a lot of this liquidation above and below. Now, because we've had so many cascading events, and the largest we've ever had, a lot of that liquidity is wiped out. But normally you would see a lot of these yellow bars at either a higher point here and a lower point here. Right now, as you can see on the Richter scale, if you go up to the yellow, that is where the highest areas of leverage is, and on the blue side is where the lowest amounts of leverage are. And you can see over in the middle, you got a bit of green, and you can see that up at 112,000, there's a lot of liquidation levels, and below at 107,000, there's a lot of liquidation levels. So what an exchange would do is they would either buy or sell or short or long the price and try to knock out a lot of people's different liquidation levels, because when you get liquidated, the exchange makes money. And this is why I also tell you, you shouldn't be using leverage unless you know what you're doing, and you should not be using leverage with a large majority of your portfolio. Not only that, you should be having maybe, let's say it's 10%. Let's say you have $100,000. Maybe use 10,000 of that you want to use for leverage, and then the rest you just section out to a spot portfolio. Mind you, this is not financial advice, but this is just something I do, okay? You should also be using a stop loss. If you're going to put your buys down here because you think they might get a wick down trying to take out these liquidation levels on Binance, you might put your buy orders in at maybe $106.7 thousand on Bitcoin, and maybe have a stop loss down at 105. So just in case it drops way farther down, you're not asked out and you're not getting liquidated, right? You want to keep your stop losses with a good margin above your liquidation point, so you're keeping yourself safe. Just in case you want to get out of the trade without losing the entirety of your bag, your trading portfolio, you have the option to do that, and you have the security and the safety to do that. So using the liquidation heat map is by far the best way, and you can do this across multiple different exchanges. It's the best way to protect yourself when trading, and especially when using leverage. Now, an interesting article I want to bring up from Cointelegraph, and this is actually over a month ago. This was September 4th, 2025, but I just want to hear the sentiment and what people still believe is true when it comes to the 4-year cycle. Now, me personally, I think that we've been following a global M2 money supply trend. You can see that we're about 96% correlated from Bitcoin's price and the global M2 money supply. So I don't think that's going to stop, but people are still so focused on this 4-year cycle, and they're not realizing that this 4-year cycle has been pushed out into a 5-year cycle for a bunch of political reasons and macro reasons that I'm going to get into in the next slides. Anyways, with that being said, Bitcoin bear market due in October with 50K bottom target a year from now. So Bitcoin may start a bear market next month. Mind you, we're in October, right? if the 4-year BTC price cycles are valid. Now, one thing that people are not understanding is that they are no longer valid. Okay, Bitcoin is currently battling a resistance trend line that could spark a $100,000 support retest. So people expect Bitcoin to bounce off this $100,000 level, maybe hold for a bit, bounce in between the range of maybe 110,000 to 100,000, and then fall back down to 50K by next October, because as we know, most downward trends from peak to cycle bottom usually takes roughly around a year or so, which is insane to me, because you're talking about one of the absolute best times possible when it comes to a macro environment setting up for one of the most parabolic bull markets that we've ever had. We haven't even had rate drops yet. I say this in every single one of these update videos that I make when it pertains to the crypto market, right? And the bull market. The ISM tick anywhere even close to 55 yet. We haven't had the DXY drop down to 90. We haven't had a ton of these things, but everybody for some reason is calling for a bear market. They think it's just a 4-year cycle. They haven't realized yet that Bitcoin is heavily influenced by the liquidity cycle and the business cycle, which I'm going to get into. Now, based off of that article I just showed you, I'm on CoinGlass, and I want to show you the October returns, right? Over the past, since the inception of Bitcoin, pretty much, right? And remember that article, what they were saying? They're saying that we might hit a cycle peak in October, right? Now, that would also mean that we'd probably have a red month in October. I'm just assuming, right? I don't know what's going through their head, right? On Cointelegraph that day. I don't know who posted that article. All I can do is show you the data and tell you what I think. So this is what I think, okay? To start off October, the first 2 weeks, we're down 4.67%. Only 2 other times in history in October have we even been negative, right? 3.8% and 12% back in 2014. Much smaller market back then. You can see that most of this year is red because that was coming out. That's a bear market year. So that isn't really even that valid. I'm going to give another point to you, okay? 2018 is also a bear market year. So that isn't really valid. If you want to match up the tops, right, 2021 4-year cycles, we had 39% in 2021. If you want to match up 2017's October, right, cycle top, we had 47%. If you want to match up even 2013, we had 60%, right, on Bitcoin's monthly returns. So for me to think that we're going to all of a sudden dip into a bear market in the most parabolic year for the 4-year market cycle, that even using their thought process doesn't even make sense. Because if you're expecting 2025 to be a bull market year, a top, right, a peak in Bitcoin's price, in every other peak year, we've actually had amazing Octobers. Now, one thing I will point out is that in 2021, we had a pretty bearish November and December for Bitcoin's price, but there's a little bit of nuance in these numbers, right? Because we actually had altcoins outperform all the way into February of the next year in 2022, right? You can even see here we had that 12% uptick in February of 2022, and altcoins were actually in the most parabolic part of the 4-year cycle. Altcoin season was actually going through 2021, November, December, January, and February, right? That's what people don't understand and realize. And I think it was just towards the last couple of weeks of March is when we really got slammed. And most things started crashing, obviously, in April, as you can see here on the chart. In November, I expect us to see a lot of green. I don't expect the last 2 weeks of October to be nearly as bad as the first 2 weeks of October. I just want to put that out there and give you some perspective on how you should be looking at the market. So now to get into a little bit of that macro stuff I was telling you about a little bit earlier in the video, right? I want to talk about the interest rates because this is something that hasn't even come down yet the way it should have until we can confidently say that, yeah, we might be hitting a cycle top, right? We're looking at interest rates having 2 more cuts this year alone, and we don't have anything definitive as of next year, but I'm going to show you all the probabilities. And this is one of the most important macro factors to look at when you're trying to decide which way the market is going to go. If interest rates are going up, bet that your assets are probably going to end up going down, and vice versa. If interest rates are getting cut, just know your assets are probably going to end up going up. Now, looking at October, right? This is when the next October 29th, when the next rate cut is slated to be. We're looking at a 94.7% chance that we get another 0.25 basis point cut, right? Which is beautiful. Now, if we go over into December and we look at the number, we actually see it coming down to 3.75. So we'll cut by another 2.5%. And that's around 82% chance of that happening this year. So most people are pricing in 2 rate cuts. If you go into January of 2026, this is where you have some people are still on the fence. But as of right now, you're expected to get another basis point cut in January. So that would be from this point to January, you would have about 0.75% lower than where we're at right now. And currently we're at 4.25%. Stay with me. I know it's a lot of numbers. It's a little bit all over the place, but just stay with me, okay? Now, why is this important? Because this eases the economic environment. It allows people to lend out money more, right? Private equity or banks or the Fed to lend out money easier. This also allows people to be able to take on more debt because they're not paying back as much money in interest and other things like that, right? So it's an easier way to get money into the economy. And right now we're only seeing that through treasury bills and bonds, right? At the current moment. But when you start to see the interest rates come down drastically, like a good amount, you're going to start to see the economic conditions ease because more money is going to be flowing freely throughout the markets. And a lot of that money is going to end up coming into risk assets like crypto. And that's what we want. That's what we want. Now, Treasury Secretary Scott Bessent, I just mentioned some T-bills. I just mentioned some treasury bonds. This is the guy you need to be looking at because he heads all of these things. Let's listen to what he thinks is going to happen, okay? We are only in the 3rd inning of a new economic boom driven by President Trump's pro-growth policies. Now, 3rd inning. I don't watch baseball that much. I used to watch baseball. But for anyone who knows what baseball is, there's 9 innings. And we're only at inning 3. That means there's a lot of time left, okay? And innovation in technology and AI. We are about to see major gains in investments, productivity, and job growth across America. This is the Treasury Secretary telling you in broad day, hey, expect easier economic conditions, right? Expect a boom in various different avenues. And the last time I checked, tech and AI were some of the riskiest of investments. So that's good for all of our smaller bags, right? Our low caps, right? He's not talking about the banking sector and oil and all these other things, right? He's talking about AI and technology. He said it right here. Why am I to believe that a implosion of the market is coming all of a sudden when we have so many reputable people telling us that the opposite's going to happen, right? Let's continue on. Another big dog in the space, right? This is from Watcher Guru, but just in $13.4 trillion, right? BlackRock CEO Larry Fink says Bitcoin and crypto market to expand rapidly. Rapidly. That doesn't sound bearish at all to me. And this is somebody who's the CEO of a fund managing over $13.4 trillion, right? This is what he's also telling you. So you got the Treasury Secretary and the largest fund manager. Just keep that in mind. And one thing that these guys understand very, very well is the business cycle, right? How the economic cycle works. And you need to know what part we are in for you to be able to make the right decision when it's time to either buy crypto, right? When we hit the bottom of the market, or a time when the peak comes and we need to be selling, right? So there's 4 phases: the expansion phase, peak phase, contraction, and recovery. We already passed the recovery phase, right? Which is right here. Where we're at right now is the expansion phase, right? I'd say we're about this part of the expansion phase. like I said, we still have rates to get cut, right? We have a lot more left and juice in the tank for this cycle, okay? And this is all measured by GDP, right? This is like your country's net worth. That's how you think about it, okay? Gross domestic product. This is your country's net worth. Understanding that outperformers in the expansion phase are information technology, right? Financials, communications, and consumer discretionary, okay? Didn't he not just say technology, right? Keep trying to tell you guys. Now, the second phase of the cycle is the peak, right? And this is where we're slated to be within the next 6 to 8 months. From this point forward, that's where I think the peak of this market cycle is going to end. Mark that in your calendars, okay? And subscribe to the channel. Just subscribe so that when that time comes, I'm going to tell you what to do. You don't have to go and do this stuff for yourself. You can just click a video, 20-minute video, watch it, and get all the information that you need. It's beautiful. So subscribe. Beautiful. Anyways, so at the peak, we have financials, energy, and materials. And this, you could also throw tech in this bucket here. It's not on this chart, but crypto definitely falls under that. It's the emerging technology. Then you have the contraction phase, and this is this line over here. Now, this is usually when you're reaching your bear market. So this was like, I would say between April and November of 2022. And then we hit the bottom, obviously, Q4 of 2022. And this is when you get that turnaround in the market, right? Going into 2023, which is the slight recovery phase, all the way through until 2024. And then obviously 2025, when we're back up at this expansion phase again. So this is how you look at the business cycle, the economic cycle. This cycle is usually every 3 to 5 years. Up until the last 15 years or so, it's actually, most of these cycles have been 4 years. This specific cycle, in my opinion, is going to be 5 years. And that's also because the Fed, Jerome Powell, took a lot longer to cut rates a lot faster. And this is why you hear Trump talking about Jerome Powell better cut the rates. You better cut the rates. This guy's an idiot. This guy's not dropping fast enough. Those are his words, not mine. But this is why he's saying these things, because he feels like he should have cut rates a lot sooner, a lot faster. And that's why everybody in that party is on his head, because they're like, come on, we need to refinance the debt. We need to pay off a lot of this debt. And you're not dropping rates. So how do you expect us to do that? Okay, this is what he's saying. Now, something that coincides ever so beautifully with the business cycle is the ISM, the United States ISM Purchasing Managers Index, the PMI. Now, this is pretty much how businesses across America are doing, right? Are they hiring? Are they expanding, right? Or it's also contracting, right? On the other side, are they laying people off? This will tell you when we're in those types of these parts of the cycle, right? And just understand something: when the interest rates get dropped lower, the ISM is usually higher, and vice versa. So keep those two things in mind, okay? If you need to pause and rewind the last 30 seconds to understand what I'm about to say, do that. But anyways, let's get into it. The reason why I use the ISM is because it's been the perfect predictor of bear and bull market peaks and bottoms, and I'm explaining to you exactly why. We are currently at 49.1 on the ISM. I want to bring you back to the peak of the last cycle, which put us at 64 on the ISM. Okay, this is the peak of the last cycle for altcoins specifically. All right, when you go back to market bottoms, now we all know what happened here in 2020, and look at where the ISM was bottoming at. It was telling you buy. And if you were there around when I was there, you know that you made a good amount of money when the ISM bottomed out at 41.7. Okay. Now, we can go back even further, right? If we go back to December of 2017 up until January of 2018, when again, altcoins of Bitcoin was peaking, we touched over 60 on the ISM. Keep in mind, we're only at 49.1. So when Cointelegraph and all these people on crypto Twitter and YouTube are just freaking out, I'm like, why are you freaking out? You're not looking at the charts. You're not looking at the metrics. You should not be freaking out. There's no reason to be freaking out, right? If we want to even go back all time, this has been accurate since the 70s, before the 70s, right? We can go back to the 2008 financial crisis. Look at that. We dropped all the way down to 34 on the ISM. It was telling you what? It was telling you buy. And if you want to go even back to the 2013 peak in Bitcoin's price, you can see that the ISM flashed over 56, okay? If you want to go back. Now, understand that no metric is 100% accurate all the time, but as far as metrics go, the ISM has been one of the best to follow. And I'm actually going to show you a list of 30 different top signal indicators in a second. And it's going to show us and tell us where we are on the cycle and why you probably, if you were freaking out, you should just like smack yourself. I don't know why you're freaking out. You should not be freaking out yet, okay? You want to freak out? Freak out when I come here. When I come on YouTube and I'm telling you guys, hey, I'm freaking out, then you should freak out, okay? But until then, no, I probably won't do that. I'll probably be very calm, cool, collected, like I try to be. But anyways, looking at the DXY Trump, I've also heard him say, right? I've also heard him say that he wants a weaker dollar, right? Do a little Google search, go on Google and say, hey, Trump wants a weaker dollar. You'll probably see 1,000 articles come up about him talking about this, okay? This also coincides with what you should be looking at when the market is either topping or it's at its bottom. The neutral point is the 100-point mark, right? This is nothing new for those of you who have been here. Just give me a second for the new guys here, okay? Give me a second. Let me explain this to them, okay? The 100-point is the neutral, right? This is the DXY. This is the US dollar index. It shows you the strength, right? The strength or the weakness of the dollar. Keep in mind, Trump wants a weak dollar. The last two market cycle tops, right? In 2021, like we just talked about in the ISM, and in 2017, late 2017, early 2018, the dollar was sub 90, right? Or close to 90, pretty much at 90, right? We are currently at 98. We're at the neutral point right now. So we haven't even fell through all of this previous price action yet here. We're actually holding support on the dollar. In my opinion, I think we are going to fall straight through because as you can see, every time we did fall straight through, we had a bit of consolidation right around the 100-point mark, as you can see here, before we completely shattered it and broke right through to where we got a weaker dollar. If you look at anything sub 94, 95, it'd probably be a good time to take this out. So a wee little bit of profit, but also looking at other top signal indicators to give you correlation. You never rely on just one signal, one market signal, right? You want 10 of them telling you the same thing, 15 of them telling you the same thing. Whatever that number is for you and whatever metrics you like to use, you have to rely on all of them telling you the exact same thing every time in unison to give you a clear forecast of what is happening in the market or what is possibly going to happen. So just please keep that part in your mind, okay? Keep that in your mind. That is going to do you a lot of good going into the next 6 to 8 months, like I said. Morgan Stanley, $1.3 trillion Morgan Stanley to offer Bitcoin and crypto trading in the first half of 2026. If we were about to fall off a cliff, why would one of the largest banking institutions offer Bitcoin and crypto trading through all of that hell? Do you think that's a good thing? Do you think people are going to want to put their money in something that's constantly crashing? Because if it's the first half of 2026 and remember Cointelegraph was talking about it being a bear market and all these people on X and crypto YouTube, why would they want you to sell everything? Does that make any sense? It doesn't make a single bit of sense. These guys are smarter than that and they know what's going on here. They know that the cycle's been pushed out into 2026. It's just all the people that are solely relying on the 4-year cycle theory that haven't seen this yet. And a lot of people are going to get wrecked. And I think it's going to be the opposite this time around. You're going to get a lot of people that call for cycle top on the first pump that happens, whether it's in the last 2 weeks of October or November, and they're going to sell prematurely. And more than likely, they're going to flood back into the market Q1 or Q2 of 2026, buy up and run up the top, and then that's when the real cycle top is going to be, right? We saw something similar in 2021 where we had that double peak. I think we're going to see something not exactly like that. We're probably going to see a high in late this year, Q4, and then we're going to see another high somewhere in Q1, Q2. We don't know just yet, right? We got to wait for the data to come out, but another high. And this run up here is going to be where they catch a lot of people off guard because they're not going to be expecting it. You're not going to be expecting it. You're going to rush back into the market, and that's how a lot of people are going to get burned. I can't even say promise you, but just wait. Let's just wait and see. I can't even say promise you. Let's just wait and see, okay? As promised, remember what I was talking about before, okay? And if you found any value up into this point of the video, please leave a like for me and comment your thoughts and opinions down below, okay? Please do that for me. But remember, I talked about seeing multiple signals telling you the same thing, right? I need confluence. So market peak indicators, sell at the top. That is the name of this particular indicator from CoinGlass that's talking about all these other cycle tops and indicators. Now, explain simply. Green side, hold. Red side, sell. We're currently pretty much at 100% at this point. Call it 95, whatever this arrow's at right now, 100%. You can here see the hit target, right? 0 out of 30 market cycle top indicators have been hit. 0. Pi cycle top indicator only at 54%, still in green. Bitcoin rainbow chart, we've talked about this on the channel before, only at 60%, still green. Days of ETF net outflows, only at 20%. 2-year moving average multiplier, same thing. MVRV Z score, we've already talked about that on this channel multiple times. Bitcoin bubble index, both of these, only at 40% respectively and 16% respectively. Like every Bitcoin dominance even, right? And that's actually the closest one. No, sorry, distance to hit is only 6.31%, right? So that's actually the closest out of all of them at this point, right? But it's not telling you the entire story because all of these other cycle top indicators aren't really that close. And the reason why this is so high is because it's been a Bitcoin driven cycle this time around, right? It's taken a lot longer for Bitcoin dominance to fall because risk assets and our mid caps to low caps do very well in a soft economic environment, which we need interest rates to come down before we can see that. See? Like how I wrap that up in a bow, right? So just understand that going forward. Please don't look at these X accounts and these Cointelegraphs. Like, what are you doing, Cointelegraph? I actually like Cointelegraph, but what are you doing? Please take the information I give you in all these videos, subscribe to the channel, and use it for your benefit. I love you guys, and I'll see you in the next one.